Hello everyone, welcome back to my channel. You are watching The Wealthy Brains, and now let's get in this video. Alasdair Macleod is head of research for Gold Money. He is an educator and advocates for sound money through demystifying finance and economics. His background includes being a stockbroker, banker, and economist. Alasdair started his career as a stockbroker in 1970 on the London Stock Exchange. Within 9 years, he had risen to become senior partner of his firm. Subsequently, he held positions at the director level in investment management and worked as a mutual fund manager. Mr. Macleod also worked at a bank in Guernsey as an executive director. For most of his 40 years in the finance industry, he has been demystifying macroeconomic events for his investing clients. The accumulation of his experience has convinced him that unsound monetary policies are the most destructive weapon governments use against the common man. Accordingly, his mission is to educate and inform the public in layman's terms what governments do with money and how to protect themselves from the consequences. Alasdair explains why gold and silver remain the only sound money and why Bitcoin cannot fill that role. It is almost certain that, like the majority of gold and silver bulls, hodlers expect to sell Bitcoin for profit measured in their government's currencies, creating for themselves relative wealth in dollars, euros, yen, whatever their governments impose on their citizens as money. But it is an investor's or speculator's approach which is accompanied by a feverish examination of charts, confirmation bias from experts, and only a half-understood concept of what is driving the price. So sudden and wonderful has been the unbanked wealth creation in leading cryptocurrencies that investors commonly proclaim that gold and silver are yesterday's story and that we oldies should move with the times. These investors claim that 5,000 years of empirical evidence is about to be overturned. But they are investors, all bulls and no bears. Other than banking fabulous profits in a Fiat at a future date, this has nothing to do with the money per se. The point about sound money is you acquire it by spending Fiat, so that when Fiat goes, you will have it to spend. It is not an investment decision, but more like an insurance policy taken out for which a risk assessment has to be made. If it is decided the risk is that fiat currencies will not fail in one's lifetime, then the insurance premium, which is an individual's decision, need only be small or not even taken out. But if it is decided that the risk is there and growing, then the allocation into physical sound money should be increased accordingly. Lack of physical ownership, be it Bitcoin, gold, or silver, is not an option. There is no doubt that economic and monetary instability are increasing. After all, this is fueling the investment rationale for Bitcoin, understood by those whose reasons for buying it are to benefit from its slow rate of quantity expansion compared with that of Fiat. But the investment rationale is that all the subjective price performance is in Bitcoin and the national currency is the unchanging objective value. Otherwise, why value Bitcoin in your fiat currency, and why would you ever sell it? And do you ever adjust your investments, your other investments returns for the debasement of the currency? No one does. The objective view of currency is so powerful that very few people can get away with it. But the decision to insure against the death of fiat currencies is about advanced possession of their likely successor, not measuring gains. It requires an understanding of what money represents, its function, and the what and the why that is happening to fiat currencies. It involves an understanding that fiat money is being debased and what that really means for the sound money of tomorrow. And it requires individuals to comprehend what is happening to fiat money's objective value, evidenced by rising commodity prices, stock markets, house prices, Bitcoin, as well as gold and silver, all measured in fiat. Today, very few owners of precious metals or of Bitcoin understand that investment is fine and dandy, but the ultimate reason for possessing them is against the possibility that fiat money will fail. They are yet to make an informed choice about what that replacement will be. Both gold and silver have acted as money for millennia and are widely distributed. They are generally associated with a monetary value, that is to say, suitable to be a medium of exchange. Indeed, silver was the basis of the pound sterling from as early as 775 AD, and that was the monetary standard until the adoption of the gold standard in 1816, though Sir Isaac Newton introduced a secondary standard for gold in 1717. That's over thousands of years of monetary silver. Silver was still the currency standard in many jurisdictions on the European continent until the Franco-Prussian War, when Germany exacted tribute from France in gold, allowing it to change its monetary standard from silver to gold. Both metals have a long history of being used as money throughout Europe and Asia, and when Columbus discovered the Americas, it was found that these metals were also valued by their civilizations, principally the Aztecs and Incas, which had no prior trading connection with Europeans and Asians. Deep in the human psyche, there has always been an appreciation of their constancy and their suitability as mediums of exchange. But unlike gold, above-ground silver stocks are minimal, and furthermore, ownership of monetary silver by government agencies is virtually non-existent, and having been generally abandoned as monetary backing for note issues in European states as long ago as the early 1870s. Silver is likely to have a future monetary role only secondary to gold. Many investors believe Bitcoin will overturn 5,000 years of historical evidence. Macleod claims the reason for this is because they think of gold and Bitcoin as an investment, not as stable money. Both are something that can be traded for more dollars or their preferred fiat currency. Macleod prefers to liken gold and other physical currencies as insurance. Once the fiat money economy collapses, you can trade with gold. As long as Bitcoin's value is tied to the dollar, its value will fall along with the fiat. A sound money currency needs to fill 5 checkboxes if it was to be reliable: public acceptance, official sanction, track record, monetary flexibility, and financial flexibility. Both gold and silver have acted as money for millennia across many cultures. People can innately understand their value, and the gold standard formed the building blocks of the modern economy. When the fiat money system collapses, governments are the most realistic faction to build a new one. They will want a currency they already possess, which will be gold. This move to sound money will require radically smaller government spending and financial experience, but it will eventually happen either in the easy way or the hard way. Bitcoin bulls claim its finite nature makes it a practical sound money. It will prevent the destructive credit lending commercial banks practice with fiat money, but a free market-based currency will need a form of money whose quantity is not dictated beforehand. In turn, only a fraction of gold's 80,000-ton global supply is currently marked for monetary use. The worldwide accumulation of hoarded wealth in the form of gold and silver, ingots, coins, and jewelry has been growing at an accelerating rate over the last 30 years. This has compromised the central banks, who were actively suppressing the price. The result is that the large amounts of gold and silver have passed from governments to private individuals. None of this can be properly captured in the statistics, partly because the central banks involved refuse to provide accurate information about their sales, swaps, and leases, and partly because the individuals that hoard gold and silver to do secretly, and are therefore beyond the scope of meaningful statistics. The rising interest in gold and silver is entirely consistent with the growing likelihood that the printing of fiat currencies will continue to accelerate in order to buy off default. While the translation of monetary inflation into price inflation is rarely an even result, we know from both economics and the experience of history that the two are linked as cause and effect respectively. So we can conclude that paper money will continue to lose its value for the foreseeable future. Paper money may be the medium of exchange and the unit of account, but in these increasingly uncertain times, gold and silver are the safest stores of value and will continue to be hoarded, irrespective of price, for as long as these uncertain times continue. In conclusion, gold and silver have been the required historical precedent and market flexibility to become the basis for the new currency. Government-backed money has always collapsed in favor of metallic money, and eventually it will do so again. This is all for today, folks. If you enjoyed the video, then leave a like, and if you are new, then do not forget to subscribe. See you till the next video, and thank you for watching.